Hello everyone, Newborn Investor here and welcome to another video. Today we are gonna start a new series of videos where I share my favorite stocks and the reasons why I choose them. We will begin with Realty Income Corporation, the monthly dividend company, and we will also discuss why it's my favorite stock to hold for the long term. So if you're interested, make sure to stick around as we're starting right now. Realty Income Corporation is a REIT that invests in freestanding single-tenant commercial properties in the United States, Puerto Rico, and the United Kingdom. If you're wondering what a REIT is, REITs or real estate investment trusts are companies that own or finance income-producing real estate. Most REITs trade on major stock exchanges and they offer a number of benefits to investors. The most important benefit is that REITs pay at least 90% of their taxable income in the form of shareholder dividends each year. Dividends are paid either monthly, quarterly, or yearly. Also, in order to qualify as a REIT, the company should invest at least 75% of its total assets in real estate. Real estate compared to other sectors are less volatile, and this makes REITs attractive to risk-averse investors. In my opinion, if you're looking to build a portfolio that generates a decent passive income, REITs are a must-have and Realty Income would be my first pick. It is famous for its solid cash flow and monthly dividend payouts. By the way, if you like the video and find it valuable, make sure to hit the like and subscribe button. I really appreciate your support as it keeps me motivated to put in the long hours for making these videos. Alright, let's move on. Founded in 1969, Realty Income primarily invests in income-producing commercial real estate that are subject to triple net leases. In a triple net lease structure, the tenant is responsible for all operating expenses associated with the property. For Realty Income, this would mean that the gross margin can be almost 100%. Realty Income made its first acquisition back in 1970 and went public in 1994, and shares began trading on the New York Stock Exchange under the ticker symbol O. By 2015, after 21 years of being public, the company was officially added to the S&P 500 index, making it a staple in the portfolio of many pension funds. Realty Income uses its cash flow to purchase more properties, resulting in even more cash flow. As of December 2019, the company owned a little over 6,500 properties, which are well diversified across different sectors and tenants. Realty Income has some of the largest businesses in the US as their tenants. Tenants are well diversified, which is essential for a predictable and reliable cash flow. The top tenants as of 2019 includes Walgreens, 7-Eleven, Dollar General, FedEx, Dollar Tree, Family Dollar, and others. Among the tenants, Walgreens is the top revenue contributor at 6%, followed by 7-Eleven, Dollar General, FedEx, and Dollar Tree at 4.7%, 4.5%, 3.9% and 3.4% respectively. Vast majority of tenants are essential retailers that operate in industries with non-discretionary or low-price components to their business, which made Realty Income much resilient during the pandemic. The two sectors that are underperforming at this time is the theater and fitness industry, and these tenants contribute less than 6% of revenue. With theaters and gyms opening up, rent collection is set to improve, translating to more rental income. Starting April, rent collection improved, and that is a testament to the quality tenants Realty Income has. Tenants are spread across 50 industries including convenience stores, drug stores, dollar stores, grocery, health and fitness, theaters, restaurants, and others. Convenience stores is the top sector, contributing 12% of the total rent. Realty Income is also diversified when it comes to geography. Their properties are spread across the United States, Puerto Rico, and United Kingdom. Most of its rental income comes from properties in the US, with Texas being the top contributor at 10.7% and New York being the smallest at 4.2%. UK contributes almost 3.1% of the rental income and Puerto Rico contributes less than 1%. Tenants are well diversified across industries and geography, and that is one reason why I think Realty Income is holding up well in the midst of the pandemic. The triple net lease structure reduces much of the property maintenance expenses. Additionally, the tenants are long-standing tenants with the average lease term of 15 plus years. This results in a predictable cash flow. The remaining leases have an average lease term of approximately 10 years. With tenants being responsible for property expenses, the margin of realty income is greater than 98%. This does not mean that triple net leases are risk-free. While triple net leases do offer several advantages, there are some risks associated with them, among which tenant credit risk is the most important one. No landlord would like to have a tenant who defaults on their payments. I think Realty Income over the years has done a pretty decent job in picking their tenants, and that is evident from their stellar operating history. Realty Income is a monthly dividend REIT with a long history of growing dividends. They have increased dividends for 91 consecutive quarters, and they have also increased dividends 107 times since its IPO. Realty Income has grown their dividends with a 4.5% compounded average annualized growth rate since going public. The current dividend yield alone is 4.4%, which means $1,000 invested today in Realty Income will pay you $44 annually in dividends alone. This is excluding any growth in the stock price itself. The strong dividend track record and the great dividend yield makes Realty Income one of my favorite stocks for generating passive income. Apart from dividend growth, Realty Income has seen consistent growth in revenue. Over the last 10 years, revenue has grown from $323 million to around $1.5 billion with an average growth rate of 17.4%, and for the last 5 years, the average revenue growth rate was at 9.8%. As of September 2019, Realty Income received 93.8% of contractual rent across their total portfolio. The top 20 tenants paid 91.9% of the contractual rent, and investment-grade tenants paid 100% of the contractual rent. The theatre industry seems to be the most affected, and it represents 57% of the uncollected September rent. I think with theatres opening up, this should improve in the coming months. Comparing Realty Income to its peers, it has performed much better in rent collection for the second and third quarter of 2020. This clearly shows how adaptable Realty Income is to economic downturns. In my opinion, the monthly dividend income and the decent compounded annual growth rate of Realty Income makes it a perfect fit for any retirement portfolio. Now, I would love to hear from you guys. Will you be a buyer of Realty Income in 2020? Leave a comment below with your answer and I'll be sure to follow up with you. Also, if you liked this video and found it valuable, make sure to hit the like and subscribe button. I really appreciate your support as it keeps me motivated to put in the long hours for making these videos. So until you hear from me again, stay safe and thanks for watching. Bye.